Maximus Analysis here for March 28th, 2016, and we will start with the ES. We are continuing to see a light day today, and again, this could be from Easter Monday. That is celebrated in the UK and in the Caribbean and stuff like that, so that might attest to some of the light volume that we have going on here. But we'll continue to watch. Again, they're holding a 200-day moving average. We don't want them on the pullback to get below 1995. And of course, we have our whoa moments or whoa levels, which would be 1978 and 1965. We don't want them to hold that. We don't want them to get below that. That gets below this pivot right here, and then you're kind of like, I don't know where I am, because we still have to respect this this choppy area that we had. Let's look at the weekly time frame on the ES, and we can see that we continue. And again, I put this to like this because I always want to give both sides of the coin here, because in trading you have to be flexible. You have to be able to adjust. You have to have levels that you could say, okay, I got to this level, I don't like where it is right now, or where I go from bullish to bearish and vice versa. So with that being said, we still have a lower high in place, so that's why we want to see them hold these previous lows, especially on the weekly time frame, being that you do have a lower high setting up. Again, we don't want to break below that 2000 level, but again, 1978, 1965 are areas that we will continue to watch. We're looking at the NQ, the NASDAQ futures here, and we could see that, again, we want them to hold above the 4365 area, and especially not get below this 4300 area. Okay, you can see basically the same type of pattern if we go on the weekly time frame for the NQ. We can see that, again, we still have the lower high in place. We're starting to get those small body candles after a 6-week run up from the lows. So again, 5 to 6 weeks is typically what we've seen in past. That gave them kind of something, a break of a previous low, and then we got to see what's going on. But where we are in regards to the action, we haven't even got up to this previous pivot lows as well. So that's why you just want to be a little bit aware of where we are. But they're a little bit below the 200-day moving average, but I'm more looking at them getting and staying above the 4300. That layers above these highs as well. Let's look at the YM, which is the Dow futures on the daily. And again, we've had our levels of 17,250 that we just say we want them to hold above. Again, until they break those levels, we still have to say the bulls have control. Looking at crude right now, the K contract, and we want them to hold above 37.15. Okay, we want them to basically definitely hold this level, 37.50 as well. If they break above these highs, I would look at a target of around 44.50. If they can stay above these previous highs, which is around 37.50 right here. But we definitely want them to hold the 37.15, because that kind of just bypasses this previous congestion area, and we kind of would just start going sideways. So we just have to be aware of both sides of the coin for this one as well. Let's look at some equity names. We'll start with Amazon on the daily, and continuing to look good. Again, had a level of above 588. And holds this 560 area. We could definitely see it get to the 600 or the 602 area. That's where I would be looking to, again, take profits into this 588 area and keep looking at it here. But let's look at the weekly time frame for Amazon, and you could continue to see that, again, we just want some follow through from this little tight consolidated flag pattern. So this is a bullish engulfing pattern. Some people might say, oh, only bullish engulfing are here, or they have to be on a pullback. Well, it's trading sideways, and now you have follow through to the upside. So breaking above these highs, which I think this high is 585, that hopefully would provide a short squeeze that would give the bulls more time to run. Again, we have to make sure that we have the continuation with the tide, which for when I talk about the tide, I'm talking about the futures, the index futures. We want to make sure that it's following that. So we just, again, use an aggressive time frame for this so that you're not caught on the wrong side of things. Looking at the daily, let's look at Google. And we've talked about Google for a couple of weeks now, and they still have struggled to get above this 756 area that we were looking at. If they can break and close under 750, I would be really watching this. And this is more, again, on the weekly time frame for Google. You can see how these are starting to get some really small body candles. So that'll be a break of last week's low. And we kind of want to see where it goes from here. So we've been, been looking at that 556 area for a while, and it really hasn't given us much clarity. But they haven't gotten above it in a matter of since earnings. So that's, from February. So just keep that in mind. Let's look at Apple on the daily, and we can see that we want them to, break above or not break for 104.80, and we don't want to break and close below 103.13. We don't want to get back, and we don't want them to break this low, because then they're starting to get back into the grinding type of mode. Looking at Apple on the weekly, you can see again we have a small body candles here, and we want to make sure we're just looking at previous pivots. So the previous pivots on the weekly is right here, and we're bucking our head right against it. So you can see it right there, and we want to really see if they continue to go lower, because then they're going to go test this 200-day moving average. Tesla, again, Tesla, really strong move, but we want to see them hold above the low of this candle. At the end of the day, we want to see them hold this 221.84, but we definitely want them to hold over this 215. And now the 215 is last week's low. Let's again look at the weekly time frame, and you can see we're starting to get to this where we don't want them to get below that. So this, again, we want to see this volume. If you're a bear, you want to see a break below that if you're not short already. So we'll look at that, because again, they've made a hell of a run, hell of a run. It has to be respected. We just are looking at the weekly time frame, because that would then put us back below this trend line that we drew, that they got above, held it on the retracement, but we don't want them to get back below it and close below it. So continue to look at that one. Last but not least is Netflix. Netflix had a pretty good day today, following through for some upside potential, and just want some follow through above this, to get over this 103.13 area. And of course, it's back above 100, but we wanted to get above that 103.10 area, 103.10, 103.13, and then they come back for the 200-day moving average. Could be a squeeze coming. We'll see, because of how tightly constricted these weekly candles are. You can see it's been sideways in a band. So when volatility compress, it's going to break one way or the other, and both sides are low. So you see that the decrease in selling pressure, decrease of buying pressure, who's going to win? We have our band that we are working with, that we've had lined up for a little while now, and we're just going to look and continue with that. So you can see how tightly this is wound. Who is going to win? We just want to make sure we look at both sides to say, okay, it gets above here, fine. If it gets below, which again, if it gets below this 100 and this 95 area, okay, so we have 103.13 and the 95 area, because of how tightly wound this name is. So we're going to see a movement one way or the other. Just be prepared for both sides. So again, we'll see the volume step up for tomorrow, being the holiday is over, Easter Monday is over. So again, let's continue to watch these markets, and talk to you tomorrow. Take care.